Hello, hello everyone. You should be able to hear my voice now. Welcome to the PivotBoss Premium Trading Room. Today we're going to talk about our monthly market outlook. So we'll get started here in a moment. I just wanted to make sure folks can hear me. Hey, good to see you. Thank you for coming. Hey, Brent. Awesome. I noticed Twitter wasn't sending my tweets earlier, so there might be some folks getting to the room late. There were several tweets over the last several hours that were just sitting there for some reason. So more folks will be coming in and joining us. But right now I wanted to go ahead and just do a quick introduction for those of you who are not familiar with me. My name is Frank Ochoa, and I'm also known as PivotBoss. Been a trader for quite a while and have a really cool background that I've been fortunate to be a part of, wherein I was able to help a software company, Nirvana, build some great tools for traders. So I've been on both sides of it, from kind of an institutional side, building platforms, creating automated systems, developing those algorithms, deploying them on managed money. So I've done the whole thing from a lot of different backgrounds, and I'm able to kind of pull all that information together to kind of give a pretty cool way to view the market. It's a universal approach that we follow here at PivotBoss. It's basically price, volume, and value for the most part. And from there, it's about executing your bias in the market, executing your bias through various techniques and things of that nature. So we do a lot of cool things here at PivotBoss, both at Masters and in Premium. And you can check out PivotBoss.com or PivotBossMasters.com if you want to learn a little bit more about that. As a matter of fact, there's going to be a little bit of an announcement here for Masters later on for those of you who are Masters members or who want to become a Masters member. But the exciting news is there are Ninja Trader indicators for PivotBoss now available, and currently in development and available. I'm going to show them off here later on when we're doing some of this analysis. But it's going to be pretty exciting. There's been a lot of folks that have been wanting code for Thinkorswim, code for Investor RT, and also code for Ninja Trader. Those have been the three biggest ones that I've gotten requests for. And then I've gotten requests for others as well. But those were the big three that everybody really wanted. So I'm pretty excited about it. Right now, let's go ahead and get started real quick. We're 5 minutes after the market, or after 4 o'clock. One thing I wanted to do really quickly was look at some of the major futures contracts that we covered in the previous months. This is something we've been doing the first trading day of each month here over the first part of the year. And we've done really, really well with some of our predictions, some of our calls. It's been fantastic. There's been, perfect precision on some of these moves. And then there's other times where things have fallen apart and we've seen, kind of the market unravel a little bit. So we're going to cover some of those situations here right now that have played out. The first one we're going to talk about is the ES. When we last left off last March 1st was this day. That was March 1st. And there were a couple of things that I mentioned about that. I mentioned, first of all, we've had a major rally, super vertical rally. We traded to 2,300 into 2,400 in the least amount of days ever. Since the 90s. And then we had a blow-off top, or potential blow-off top. We didn't know if that was going to be a blow-off just yet, but I said that candle right there, it was 266% of ADR. Anytime something like that candle forms, or that day forms at the end of a major move, it's an indication that that is a top. And that's what we talked about on the 1st of March last month. I mentioned if there's any rejection of 2,400, this could be a rubber band trade that at least brings you back to a few levels. The three levels that I talked about, you can actually, let's bring up monthly pivots. Right now it's set to week. Here's the month. And then we're going to also look back at the previous month's pivots as well. So these are the monthly PivotBoss pivots. The two levels that I talked about, where if this thing were to reject here, then the clear target, number one, would be the previous close. That's the previous close right there. It's that white dotted line, right? That's the level where it went super bid on. So that's the first target. The second target would take you all the way down into the midpoint of the previous month's range. So again, if you go back and take a look at the monthly market outlook for March, that's exactly what we talked about. And look at the low. The low of the recent move was right on that level. I also mentioned that there could be a shot to get somewhere into this zone between 23 and the midpoint. And I was actually looking for 2307 to be hit. So we came very close to getting that target. We finished this one and we didn't quite get this one. But for the most part, we knew that this could be a topping pattern and these would be the targets that the market would be looking for. So you can see over the last month, that's how it's played out. First move here, second move got rejected here, and so it dropped down to here. The other thing I mentioned was that any pullback into this zone, 2300 to 2307, 2310, could be offered an opportunity to buy it back up. So those were a couple of things we talked about. And you can see how it's played out since. Great blow off top, great continuation toward these targets, and then look at how bullish the move was. Once price dipped into the 2317s, boom, it rallies right back to the previous month's close, that white dotted line, like a magnet. So the previous month's close was indeed a magnet. And we knew it on the first day that if this was a blow off, then it would return to this price like a magnet. And then you can see here, after price was bought, it returned to the previous close as a magnet. That's why, every time I talk about trading, I mention that trading doesn't have to be difficult. It doesn't have to be that difficult. The analysis doesn't have to be that difficult as long as you're basically doing your analysis on things that matter. The previous close of any period of time matters. The previous high matters. The previous low matters, right? And that's why I do my PivotBoss pivots the way I do. I use those three levels to create the pivot range and then to create these extensions outward. You know what this little yellow line is right here? That gold orange line? That's the 25% extension of the previous month's range. That's R25 on the PivotBoss pivots. Goes up here to R25, rejects, comes back to the high, right? And works its way down to the mid. Because we had such a wide range, you're not likely going to come all the way here. So the mid is usually the great target. You can see that's how it's played out. So where do we go from here, right? Where do we go from here? Overall, what I mentioned in the previous market outlook has come to fruition, and I think it's going to continue to do this. What I said was, when you see this type of move happen, you have a blow off top. You start to see the developing volume profile, and at the time, it was a tiny little HVN like this with an LV in here and here. So I said, you're going to see the price trade in here to build that out. Again, we've seen that play out. These are just simple market forces, right? This is the fundamental way that the market reacts time and time again. It's just how the market behaves and operates. If you're going to see a big rally up, at some point, you're going to stop going up and you're going to go sideways to digest that recent move, right? Even here, it rallies, it digests. Even here, it rallies, it holds for a second. That's what it does. So that's what we thought could happen, and it's kind of playing out. So what do we do moving forward? The idea is, typically speaking, that when the market builds that energy after a significant uptrend, you typically go with the direction of the trend. The market will still likely unravel itself to the upside as long as price can continue to hold 23s. That's the big deal right now. As long as this price continues to hold, for example, tomorrow, we could drop right into that level, and it would still be a great spot to buy. So any pullback still into 2300 is still an opportunity to buy. Any rejection of this low. Right now we have a rejection type of day here on a higher low basis. So already we may be pushing our way up toward the top of the range. So I've given a couple of key levels here. Obviously 2300 down here in this recent low. Again, if price were to come in here, bulls look to defend it and return it back to value and perhaps toward the top. At the moment, short term, this is what I'd be looking for tomorrow. How does price respond around 2350 tomorrow? If price opens up and generally remains above 2450, we could be looking at a push into 2371 and 76.5 to 77.5. That could be a short-term strength move up. If there's any failure to hold 2340, likely retesting these lows at some point. So right now, it makes it difficult anytime you have lower highs and higher lows, because now you are compressing into a range, and that's when whipsaws can happen. So being that we are right at value of this micro composite range, it makes it difficult to initiate a trade around value at this point, because you could experience some chop. But I'd be watching 2350 for an early push up. If there's any failure to hold, then obviously we may see a good dip. And if that dip does happen, it could be a great buy. So where's the upside target if we do start to push up? Here's the impulse range that developed after the blow off top. Price dropped into this low here, which is 2354, and then rallied to the midpoint to solidify that range. Once that happened, 2354 became a very important pivot. And now again, if it can continue to hold generally above that zone and above 2300 in general, the idea is we could retest 2401 and then start to see expansion toward these important targets above, 2424 and 2447. So those are the next two major targets, is basically 25 and 45 above. How much more energy does this need to build? We'll see. But I'd be careful in here, because once you get into a range-bound market, it could persist, but it has an upward bias. So right now, I still think we have an upward bias. Pullbacks into 2307, 2310, 2300 could be an opportunity to buy. So that's kind of the long-term look here at the ES. Any failure to hold 2300 would be significant. And again, this market has not really seen an ability to pull back much. This is about as big a pullback as we've seen since Election Day. And if we fail to hold 2300, there could be another major spill to go back toward 2220 to 2200. So this is a very important pivot in the chart to continue to watch. Let's see here. All right. So let's take a look now at ZB. These are the bonds. The bonds is one of the ones here that kind of fell off the rails a little bit. In the March meeting, we talked about how this was the range right here. This had been the range. We were defending here, we were selling here, right? Buying here, selling here. That was the idea. We were in this range and we had a lot of great moves. And then this was the first trading day of March. And I said that this is still an opportunity for bulls to defend, but sell stops are building below. And I said as soon as price can establish acceptance above 149.24, that's composite VPOC, that pink line right there. Once it can establish acceptance, we likely come back to this 151.11 and perhaps back toward the top of the range. So that gives you a reference point to watch. Bulls were defending down here, and then on this day, price rallies, attempts to hold above 149.24, and failed hard. Ended up closing way down here, right? That was the beginning of the market attempting to push up and failing, so the stops came out. And that's why I usually prefer to do business at those edges. At those edges, because it is the epitome of where reaction will occur. It's going to be rejection, or it's going to be acceptance, right in the zone. Are we going to push higher and continue, or is it going to reject that move and send the stops, triggering the stops on the move down? So which one's going to happen? And right here it failed, dropped into our 146, a key level. That's been a key level for at least a couple years. And then from there, we've seen a pretty impressive move up. So again, what happens from here? I think the 153.21 is still the target to watch, because what we've seen transpire over recent month is price pushed below the 147.12s, major support, hit 146s, and then a major stop run occurred back above 47.12, made its support, and pushed back above that support zone. Anytime you do that, the implication is once you get back into this price distribution, 80% odds that you go across the range. And so that's what we're doing right now. So it's not hard to say that we likely continue here. That could be the next 2 or 3 days from now. But what happens from there? That's the point here that we got to continue to watch. Overall, the implication is more upside. And once we get up to this target, again, you got to be watching for signs of rejection up here for a return until proven otherwise. I know I mentioned before that I had been bullish. I had been bullish in ZB at one point. This was an absorption signature here. I believe that we could see a push through these highs and we could rally to 160. And that's what had been building. But these bulls, after coming in time and time again, eventually they didn't get paid and some stops came out. Now they're retrying it. So at some point, we may see stops come out, but it's got to have acceptance above 154.07. Once price can get back above 154.07, it's going to be a clear path back toward 160. But for now, that's still an area to defend. So right now, short term up here, watch for signs to rejection. That could bring you back to value. That's 149.24. So right now, that's the play short term until proven otherwise. Above 157s or 154.07 squeezes back toward 160. CL. Now this one we talked about before, and it's been phenomenal. This one we talked about a lot last month, and where we left off, this was the first trading day of the month right there. And so what I mentioned was we're up here trading in a tight range, but we've been trading in the upper distribution of that range for the last week plus. And what I mentioned was when you're trading in the upper distribution like this and you cannot get acceptance higher and higher, all of those late bulls at the upper end of this range likely get their stops run back to the bottom of the range. So that was our first idea last month. The second thing was, if price pulls back to the bottom of this range, it could be a great buying opportunity back up. Because we're always looking for fades, right? I mentioned if there's a failure to get back above 52, that triggers a continuation back toward this pink line, and that's composite VPOC, that's 46.69. And what happened on this day was a major run of the stops. It went right into 51.71, 52. We were looking for signs of rejection there, and it was clear that nothing was happening. By the way, in the trading room that day, right at this point, is when we were looking for rejections. And I said, all right, let's look at the footprint. And one thing we saw in the footprint was that right in this zone, right here, before everything really fell off, because this was only half the day. And then once the stops really came out, the other half of the day was down here. So right at this point, what we saw in the footprint was huge buying balances that were just not getting paid. They were being absorbed. I mentioned in the room, this looks like a major sell-off day, continue to sell. And even before 11 a.m. that morning, what we were talking about in the room, I said, there are some days in the market that just go. And this is one of those days. All right, at some point, if you're not going to go in reverse, it's going to turn into a huge stop run day. And I said, step on the gas. So, that's how we approach these things. We have key levels. We watch for a market reaction. So right here, failed to hold. And that's what we talked about before. As soon as price gets under 51, look for a rejection. If price cannot get back above 51, watch out, because we're going to this pink line. And we got so close to it on multiple occasions. So that was basically the extent of last month's analysis for crude oil. You see how it's played out. The early idea, again, late longs at the top end of a range not getting paid, their stops will come out. It's all about who's positioned, where the stops are they getting paid, those types of things, and then making a decision off of that information. What we've seen here recently is after this impulse move, you can see I've created a key range here. Price dropped down to this low and then bounced. So when this low formed, we were looking to get long into this target, and then it started to fail. Then another rejection tail came here, and they tried to hold. Then another rejection tail. Finally, what I mentioned was this thing has to get above 48.42, 48.50, and then we have our path to 51.06. Once 51.06 is tested, this key range is now in cement. It's locked in. And a key range is an impulse high or an impulse low that develops, and then an aggressive push in the opposite direction until it finds the next impulse move or impulse low, and then from there it snaps back to the midpoint, and now you have yourself a large key range where you can do business, look for traps, and look for extensions once you see movement out of that range. So this is the key range to watch. 51.06 needs to be tested. At the moment, we're seeing strength to the upside. I'm going to be bringing up NinjaTrader here in a little bit. That's going to give you a little bit more of a look at crude oil, at least on the current front contract. And that could give you a little more indication that this thing may be bouncing back toward about 53.40, which is kind of that MCV pocket of this range, with a shot at seeing even a little bit more into the highs here. So this could have a little more upside. I did mention before that on this bounce, if we had seen 52, 51.71, it would have been a great opportunity to sell it. But since then, we got a bounce that fell short, then another bounce, and this is more bullish. So I would not be looking to sell here, generally speaking, like I said before. Instead, I think the momentum is still to the upside. That previous high right there, about 49.5, price comes into that zone. Bulls want to squeeze into 51.71 and perhaps into 53.40 right here. So this is kind of bullish at the moment, the way it's been playing out, obviously. We haven't yet hit 51.06. But there could be an opportunity. I just want to see what happens here. It's hard to call right now. You see this move right here? This is what we talked about before last month. I said anytime you see energy build up like this, whenever you see the energy get released, you're going to see a big move. And I said something like this, or something like this, I said something like this, right? One of those types of moves. And that's kind of what we got. Now, this thing is starting to work its way up, and I think we may be coming right back toward these highs. But 52 is going to be very important, and it's still the pivot to watch. There will be bears looking to defend there, so it's still a key pivot to watch. This will be the deciding factor whether we come back to this point or whether we climb back above. 52 is still the pivot. So right now, crude oil, a little different, but it's very clear where the pivots are. The FOMC key level from December 14th is right there at 51.71. After rejecting the FOMC level from March 15th, we're now climbing back toward that zone. Let's take a look at GC. This one also took a hit here. And what we talked about in the previous commentary, or the previous month, was with GC, we had a major continuation to the upside, and we hit our target. So when price started to bounce down here, we were very cautious about the move up, but what I mentioned was if this can hold, right, then we could see a move that takes us as far as 12.63. It took all year up to that point, nearly 3 months to get there, but it got there. But that was our last real target. And then price had pulled back. This was the first trading day of March. I mentioned 11.45 was the quote-unquote over-under. When I talk about an over-under, it's the pivot. Where does it close? Is it can bulls control that pivot the next day, or will bears control it? If bulls can control 11.45, I mentioned we see 12.80. That was our primary idea that day. Watch 12.45s. Look to defend 12.45s and push it up toward 12.80 for one more shot up. And then what happened instead, when price got to 12.45s, it just could not hold. Could not hold that day, and instead closed lower. The following day, it pulled back and did another one of those rejection tails. But this time, right, I told our traders, fool me once, right? Shame on me, fool me twice. Or, whatever. I sound like George Bush right now. Basically, you're not going to fool us twice on this one. So when this one came in, bulls were looking to defend right here, but we weren't. Instead, we were looking for a shot at rejecting the highs. because once you fail something like this once, the next one will fail and continue. It becomes a value trap. So what we looked for the next time was this high right there. Failing to hold above that high was an early indication that the midpoint would be taken out and that new lows would be created, and that's how we were able to negotiate that move down. We were then able to look at stops at 1205 that implied a move back up toward 1263. So we were able to negotiate after that, but that was the point right there where bulls were no longer able to hold it and it had to auction lower. Now we're back to it. So where do we go from here? We have a clear range from 1240 up to 1260 that's developed. I mentioned before that we have a very nice little range that's developing here, and that range could continue to develop. So this one is tough because gold has had quite a recovery. And I talked about before, if you're going to recover here, where do we go to, is it here? Is it here? Is it here? Election day was such a high range day, right? The highs up here near 1340, the lows down here near 1270. That's a huge range. Where is the market trying to get back to? We got it here. Are we trying to go higher still? Maybe. Very similar to what we talked about in crude oil last month. This is the trading range right here, right? That's the trading range. Here, up, then down, then up. And right now we're forming a range at the top end of that range. If all of these late bulls here don't get paid through 1265s, 1263, then the stops will come out below 1240 and we will come back and retest near the lows here, 1200 basically. So I'm watching for these participants. Are they going to get paid, or will a rejection here lead to a stop run below 1240? So I think this is very important. I'm still watching for this target to be reached at 1263 to 1264.90. We haven't quite reached it since we had that initial push. So I'm watching this zone here. What happens? If there's any major rejection here, then bears will be hunting the sell stops below 1240 to fuel a move to 1200. That's the idea. Above 1265 continues this thing back toward 1305 and that November 2nd FOMC key level. So that's going to be the major pivot. Right now we have some nice energy built up over the last 2 weeks. I think we can get a pretty decent move here. So I'd be watching for a rejection somewhere up here, and that could bring you much, much lower. Any acceptance beyond that zone unleashes 2 weeks worth of energy to the upside toward 1300. So I think something may be brewing here for gold pretty soon. All right, let's take a look here at a few stocks here. Last time when we got around to it, there were a few stocks. Some did really well, some did okay, and some did not do well. I usually pull out a few here that we look at. This was the first one we looked at. We were looking at it here. This was March 1st. I mentioned that's a good tail. If it can get above 29s, we got a shot to see 31s and change. And it got into 30. Today it got to 30.08. So it's gone higher, but it hasn't been perfect, right? But it did get the push higher here that you're looking for. And then it did get the retest back at the level. So this one may still have some upside ahead. And again, we were looking at, I think it was 31.30 or something like that. So this might have a little bit more. But it's just not as great as as what it looked like before. This was DLB. This was also a buy. We had it, what was it? I think it was here. This is March 1st right there. I mentioned this one had a decent shot to continue higher, and at the, we had these ADR targets. So I like the ADR target. Our ADR targets are based off average range. So the reason I'm pulling this one out, DLB, is because when we looked at it last month, it was on this day. That was the first day of the month. And I said, we don't know if it's going to be the low of the month, but if that is the low of the month, Then our high priority targets are the 50% target, which is here. That's half of average monthly range forecasted from the low of the month. And then this level right here, which is 75% of average range. That level was 52.38, I believe. Something like that. That's the level that I said was our primary target. So from this day right here, I mentioned that could be our primary target, and it hit that target. Again, it's not because I'm doing anything that's different than what you could be doing. This is all universal tools here that just help us forecast. This indicator, again, this is an indicator that's available to premium and also masters, is based on average move, average range. So based on this low, over the last 10 months, the average move takes you here to that third target. That's the average month's range. But the market doesn't move in perfect average months all the time. Instead, 75 becomes a great high priority target. 50% becomes a great scaling target. And you can see those two targets were hit. This one was not. And that's why I target this one as a primary. This one can be targeted as a primary if the previous month's range is super narrow, because that would imply expansion. Same thing for this one. This is your extension, or extended target, and that's your 125% target. So you can see, again, a nice move right to the target. Here's a one for today. I was watching this one earlier, and it's a low price stock. Right now, trading 760 on the close, low today of 728. But I found it very unique here. Had a huge gap here back before. But I found it unique because we had this support here at 8. Major support, held and held and held and held. And then right here, it just couldn't hold anymore and dropped. Price pops up. Right there, they're going to make 8's resistance, drops. Right here, cannot establish acceptance below that prior low. Matter of fact, that prior low right there, we closed one bar below it. The next day, closed back above it, and then we're retesting highs. So, anytime you see price break below support like that, and then you see rejection down here because they can't extend the range, now I'm curious, are these late bulls going to get, or bears going to get paid, or will the stops come out above 8? If they come out above 8, it's a easy move back toward value. Again, with progressive lower highs here, it's not a bad spot. So right now, a little bit of a rejection tail here. This little pullback after last week's move up, again, could fuel a stop run above 8s. That leads back to 956. That would be a huge move. We're trading 760, so to get to 956, 960, $2, right? That's a pretty significant move right there. Back toward that target, again, above these highs here could really move it. So I'm going to see how that one plays out here. Could have a really nice move ahead if they can just pop above that zone and run some stops. You see, we had a few sell candidates last month. This was one of them. This is one of those ones where, again, you form a major rejection tail right at 54.30, a major resistance level last month. And that's the first trading day of the month right there, that big tail. And so I mentioned, typically speaking, you look to defend the midpoint of that tail right there, the midpoint. And then you look to push this thing downward, likely toward a fill of the gap, right? And maybe a little bit lower. So this one did just that. If you look at the bearish month range, there you go. This is your 75% target. That's your 100%. That's your 125. So it actually got to an average month's range. And again, look at the little minimal adverse excursion. Price only went against that dot a little bit, and everything else has been in the money, right? And even after this major bounce, it's still below the entry. So a nice move, fulfilled the targets here. It wasn't great. It went sideways a lot. But again, as long as you can get a favorable entry, great trade location, manage your risk, you know, the thing has a great shot. And that one worked out a little bit here toward that target. This was one here that... you know, this was a huge move. I gave this one to our room a couple of days before, and then we got earnings right afterwards that dumped this thing. But on the first trading day of the month, I believe was this day, and I said, even though I gave this to our traders and it's already made a huge move, I still think that this has an opportunity to continue lower, back toward value. And it still has. So again, another rejection day at highs and a great continuation. Hey JP, good to see you. Sorry about traffic. I know I have some friends that were Snapchatting some Houston traffic this morning and this afternoon even. I mean, saw some crazy things like big old 18-wheelers stuck in wrong way traffic and things like that. Ooh-wee. So nice move there. This one was one we talked about last week, and this one did not work out. And I wanted to talk about this one because it's something we see quite often. And actually, we flipped on it in the room. So here was a time where price pushed above 31s right here. Pushed above the top end of a key range. Here's the midpoint of that key range. Here's the bottom. So I mentioned, and the first trading day was somewhere right here, right? And I said, okay, look, bears are defending right here, trying to keep it sealed here for a shot at retesting the mid and coming back down. But it's clear that all the stops are above that zone. So if these bears don't get paid, there will be a shot to squeeze. So I did give that. But you could see over here, eventually, it did. Look at the higher lows that come into it. So say you got short, right? I think this was the first trading day of the month. Say you got short anywhere here. I was talking about 31s to defend. If you get short anywhere in here and price is going but can't go, and higher lows are forming, at some point you may see a squeeze, right, and a stop run through those highs because the bears are getting paid less and less and less and less now. And so we did flip on this in the room, and I said, okay, now it looks like we're about to get a squeeze. But again, that's why I love to identify these levels that are just right on the edge. This is where bears are defending, but you can see they're not really getting paid. New lows are not being seen, so at some point the stops come out and a squeeze occurs. You could try both sides of that trade, right? But I mean, boom, there it happens. So what a move here in FOXA. I just wanted to talk about that one a little bit. ORN has continued to drop. This was from our February meeting where we had this rejection tail, that's February 1st, happening here off that, and I said, hey, those are traps, so sell that one. And then we saw absorption here, and the idea was to bring it back to $9, right, these lows, and it got to $9. Well, it pushed through it and continued through that level anyway. So, I mean, this thing is really torn off. So from this rejection tail right here, midpoint of about 1070, it's dropped to 730 right now is the last price. So just a major continuation there on that one. Quad was another one we had. This was also from the February talk. And you can see right here, this one rejected off the highs up here. This was your major rejection tail that we found on the 1st. This is March 1st. So, or just March 1st. So this one right here is where I said, okay, midpoint retest right there for a shot at seeing a move across the range. And there it is, a move across the range. So again, this is very, very simple things where we're just using market-generated analysis, market-generated ranges. This is the range that the market wanted us to trade. It's 28.5 to 23. It's not always perfect, but if price tries to hold above 23s and can't, or 28.5 and can't go, then the stops come out. Very simple. If you see a rejection like this, then you know, hey, stops come out. If you see this, it comes. This is where the market trades. So just look for the edges. That's all we did here. We found an edge. We found a midpoint retest. Hey, by the end of the month, it had dropped as low as 21.25. And then we saw this major tail. This is one where I showed our room. I said, oh, look at this tail. and then a big breakaway gap, and it pops up there. And now once you get above 23, the next pullback here, perhaps into 24, may be an opportunity to continue this thing back toward 28. So anytime you see a major rejection like we've seen here, then we see a big gap up here, back above, and a big squeeze, I think this one may be headed all the way back up the range now. The entry is not as easy though. Over here, the entry was easy. Rejection tail at resistance, midpoint retest, boom, done. Over here, nope, because it's already into the move. But you see these highs and that midpoint right here at 24, starting to see a little bit of highs here. So if we come back to that point, it's also the mid pivot for the week. That could be an opportunity to defend. So watch for rejection here. Any pullback this week could offer an opportunity to defend. First shot at seeing this thing walk itself all the way back up toward high. So quad was a really nice one as well. Hey there, Sonny. Yeah, we talked a little bit about the NQ earlier, or did we? No, I missed it. My bad. Thank you for bringing it up. Here's the NQ. Now the NQ, very nice, the way it's played out. This one, not sure I talked about it last month because it was not really. Yeah, this was last month. The first trading day of the month was here. And it was good to avoid. It didn't do anything here. But since then, we've seen the market create an impulse move, right, from here down to here. And we've seen it widen the range now, 53.20 to 54.40. The trend is still very predominant to the upside. But after a major rally, markets tend to establish value or create value. They look to trade in balance. And so you've seen this continue to play out. What I talked about today in the room was I thought that 54.20 was going to be very important. And instead we saw a big double-sided day here where price tried the highs and rejected down to the lows, found 5,400 and closed back up toward 33s. So we have a range here at these highs. It's just not as easy at the moment. My initial inclination is that we're looking for signs that this thing would reject and bring us back down. Any pullback would be an awesome opportunity to buy still. I just don't know if we get a pullback of that magnitude. So right now, it's very difficult at the moment to talk with certainty around this. I think the uptrend is still up. I think we're getting close to knowing more at the moment about whether we're going to reject or not up here. I always mention that it takes a few days of building this thing out up here, getting some energy, bringing some folks into the market, and then running the stops. And right now what we've done is we've expanded the range day over day. So we have, how I talk about a double inside pattern. This is a double expanding pattern. And that's kind of a whipsawy pattern that it implies volatility as this thing is kind of jiggling to really do something, whether it's this or this. This is the real pivot. It remains 54 to 53.95. And the fact that bulls defended it today tells us that there's sell stops below there now. So if there's any rejection up here still, a 54.50 or 54.55, if there's any rejection still, there could be an opportunity to run the stops below this prior pivot low and into recent lows down here, into 53, because we didn't quite get that last time. And should price get down there, woof, this could be a fantastic buy back up the range with an opportunity to scale at 61s. I still think overall we're still pointing up, still. Nothing has really changed to that end just yet. And in terms of the next upside targets here, man, look at that. It's just continuing to knock these targets out. Let's add, we're at 225, let's add 250. I'm going to take 175 and make it 250. Now let's make it 275. There you go. That's a next major upside target right now. I'm not going to go mid just because we have this sort of range. That range is enough energy to do that if it wanted to. So 56, 56.02, next upside target based off of the range we've been working on. The reason I'm still working off of those targets and continuing to add instead of being done with it over here is because we haven't really been given a great impulse range to work with since. So I'm still working based off of the impulse range from the election. That's the election day impulse range. And so far, all of the moves have been, for the most part, off of these levels. So right now, I'm still using that one until we get something better. This one could be a short-term range to watch. But I still think the flow is to the upside. We may see a pullback that could be a great buying opportunity. So those are the thoughts on NQ. Earlier, John, since you're in the room now, talked about looking at some of these defense stocks. So I wanted to take a look at some defense stocks right now. Was it HII, I believe, right here. And the idea was, is there an opportunity to buy these defense stocks? Because we have seen a bit of a pullback, right, in some of these. Obviously, the budget for defense was increased significantly, so you're going to start seeing more. That's how it is, right? So will these start to see some strength? We'll see here. I think on this one, it's been very bullish here. It's failed to find a pivot low just yet. So it's still in the price discovery phase. Had a lower high here, and it's pushing downward yet a little bit more. Let's see. No, I haven't already done it. Nope. So right now, I still think there's a little bit more downside. I want to see what happens right here at these previous highs. Right, it was this market was very structured on the way up, and then had this big blow off and back. So 197s here off this high will be very important to see how it behaves here, because whenever this one decides to find that pivot low, I think it would be a quick move back toward 215, and we might see something like this develop between 195, 197, and 215s, right? Maybe even a little bit higher. But right now, I think that this thing is still in a price discovery phase. At some point, we might see a bounce, a rejection that leads to a bounce. Still looking or searching lower on this one. RTN's another one. This one also tried to hold above these highs. Here's the rejection of that high. That's why I always say, look at the stops here. Bulls defending, defending. So their sell stops are here. Do you want to sell here? No. You want to look up here for rejection of that level. If you see a rejection of this price here, you can sell it there and anticipate a break of support. Right? Boom. Try to get that. And once support was broken, right now bulls are trying to make, or bears trying to make it resistance at the moment. Bulls trying to create support here. So right now, I see bulls defending 149s. And if they get back above 153 here, I think it re-challenges the high, and we might have our impulse move now. That high to this low is your key range. That's your value area, and you're working this range. So we might be able to retest highs on this one pretty soon with bulls defending 149s. We also have NOC. NOC's been trending nicely higher overall. This one may have a nice little impulse range here, and then you got some trading in this zone. I like it down here better. So you can see previous highs, gap, rejection, LVN. So should price get down toward 225s, it makes for a better opportunity to defend as of right now. That's a great LVN there. Great separation between price distributions, and would offer a good opportunity at that point. So I think 225 might be one to wait for on that one. Then you got GD. GD's been trending up very nicely overall. Looking at some of these industry groups like this really makes me want to pop up VT right now and start looking at some industry group rotations. Something we can do in the trading room here ahead. But right now, this one has had a nice push up, has held generally above some of these price distributions. And right now, 184s is where bulls are defending at the moment. I don't know. These have been very bullish, so I can tell that bulls are trying to keep that area bid. This is a little pullback right to that prior high. So 186 is a retest zone. They're trying to squeeze up. If there's any failure to hold 186s right now, then I think we kind of go lower. So right now on a very, very short term, and this is what I'm mentioning right here. So if I zoom in, on a very short term, here's 184s, big rejection, big rally. And then that prior high, buy stops came out above that prior high. When price comes back to it, bulls want to defend that prior high, and they're doing it just now. So short term, 186s offers an opportunity to get this thing back toward 1193. But 184 is where the big support is at the moment. Lastly, LMT, and here it is. LMT, we looked at this one a little bit earlier. Trending up at the moment, has a look like it, almost looks like a three-point reversal type or an inverted type of, or head and shoulder type of pattern, which could lead to weakness. If that's the case, because up here we're in a thin part of the profile. If price can't get back above 270 here pretty soon, then I could see this as a rejection pattern that leads price back down. That could be 255.80. And that is composite VPOT. Or maybe composite is shifted now. That's an HVN for sure. So that's definitely the HVN to watch. I'd be watching 270 here. If prices cannot get back above 270, they've been having trouble here. May see a move down here first, and then a buy opportunity may come after. So I'd be cautious there. Above 270 continues this thing. That's the top of the range. So those are a few looks here. Really down toward 245 would offer a great zone to buy. Again, I don't know how much farther we go, but this is enough juice here. So if there was a pullback, right, it could offer an awesome opportunity to bring it back up. So those are a few thoughts there. I did want to. It's a good question. Hi, how is an impulse range confirmed? So to start using those new impulse range expanded levels. Yeah, that's a great question. What I'm typically looking for an impulse range, and again, they can happen in any time frame in any market. You're looking for here. Let's look at something that has one. This can be in an intraday chart, it can be a higher time frame chart. They happen in all time frames. But what I'm looking for is for price to push to a new high or a new low. Like just rally to one side. Get a huge rejection where it does not retest that zone and comes all the way back until it finds a low. Whenever it finds a low, it does a quick bounce back into the midpoint of that impulse move, and then that's when it becomes a key range for me. So I'm looking for when price does that and then boom, slams down and then bounces back to the midpoint. That's an impulse high, an impulse low. There's the midpoint, and now you have your key range. But it's not every high and it's not every low. It's a reaction. The impulse move is a market reaction. It's a major reaction up there. It's a drop until you have a major reaction here, and it's a bounce to the midpoint. That's how a market creates ranges. That's how a market creates the edges for the marketplace to facilitate trade. So that's something to watch out for here. Is anytime the market sees a big move up and then you see a huge sell-off and then it bounces, that impulse move can be very, very important for days, weeks, and even months to come. For example, this high that we reached right here, 2376 half, that 150% where it says right there, we just reached that target on March 1st. And if you go back and look at that last video last month, that is when I said that is the target we've been waiting for, and it's based off of the August 2015 key range. So if you go all the way back to August 2015, there was a move up, it rejected and sold off hard. Sold off hard until it found that low. Once it found that low, it bounced to the midpoint, and then we have our key range. And then you can see how the edges were defended here and here. You can see when we got expansion, etc. This is your 50% expansion from the edge of the range. That's your 100% expansion, and there's the target. So these can stay in play for a long, long time. You know, JP, that's a good point. Good point. Thanks for that. Thanks for that. He's saying the politicians want the defense stocks lower so they can be long before they break the bank on defense spending. That's a really, really good play right there. Very pro move. So that's a couple of thoughts there on some of these markets. I did want to show off something here. So I'm going to come over here for a moment. So I wanted to talk a little bit about NinjaTrader for a moment just because I wanted to show off some of the indicators that I put up on here. These indicators are PivotBoss indicators that have been requested for quite a while. And I tried to outsource them before, wasn't happy with it, so I went ahead and wrote them myself. And the ones you see here are standard to what we do. PivotBoss ADR method down here at the bottom. This basically shows you daily range, average daily range, current daily range. It's adjustable to various daily ranges, whatever you want. A 3-day range, a 5-day range average, a 1-day range average. And so you can see here how it basically quantifies that data for you. And anytime it's color-coded here, it tells you to watch for things to occur or to do certain things. You know, you get this big day here, this big blue bar. That was the 266% of ADR bar. Look how big it was compared to a lot of the days before. Anytime you get a blow off like that, you can look to fade that bar, and that's kind of what we had. So this visualizes or revisualizes some of the data we talk about, and we see the indicator here showing a lot of great key levels that we use every single day. 10-day ADR, 5-day ADR, 125%. Level, 65% level, and then the current range. So great stuff there. PIMA 3 pivot-based EMAs is right there. So the PIMA 3 indicator is great for stack and slope relationships. So when the market is trending up, as it is at the moment, let's see here, let's switch this over here. So as the market is trending up, you look for pullbacks in what I call the trigger zone. So the trigger zone is the spot right there between the first two moving averages. So whenever you have a stack and slope relationship, you pull back into the trigger zone, you're looking to defend and squeeze, right? And so that's an important indicator we use in addition to other approaches using that indicator. This is one is really exciting here, and we'll get to that in a second, but I wanted to bring up one more indicator, which is the PivotBoss oscillator. Again, we have several of these that I've been working on. The PivotBoss oscillator is a great indicator here. It's the only oscillator I really use. It's the one I developed based off pivot-based EMAs. They're differential, the spacing between the EMAs, and it helps provide some great opportunities in a trending market. You're looking to defend pullbacks. You're looking for when the color changes and things like that. There's a zero line for above below stuff. It's color-coded. I have not added color-coded to the bars just yet, but will be coming. So that's a great indicator here that we've been using, and one of the things I love about this indicator is it's fantastic for fading divergence. So one of our key setups we look for. Lastly, I want to take all this other stuff off, and I just want to focus on one more thing really quickly. This is VWAP, but it's composite VWAP over the last year. So this is a daily time frame for the ES. And this is something that I really missed with some of the platforms that I currently have, because I can create an intraday VWAP, I can create a weekly VWAP, a monthly VWAP, but it's very difficult sometimes to create a composite with certain platforms. In this case, it's a beautiful composite, just like composite VPOC, right? It takes all the data that you currently have right there, and then it creates this line based off of it, volume weighted average price, right? I didn't invent VWAP, but what I did do was I used VWAP to create these levels, that one, that one, that one, this one, this one, this one, and those are standard deviations of VWAP. So this is one standard deviation above VWAP, 2 and 3. This is 1, 2, 3 standards below. They're color-coded because generally speaking, when price is below value, you want to be looking to buy. Generally speaking, when price is above value, you want to be selling, unless price is in a markup or markdown phase. What I usually teach is that when price gets outside the third standard deviation band, like it does here, right? There's the third standard. It gets outside and drives. You now become in a price discovery phase. So when price pulls back to that level, that's where bulls defend. That's where algos defend. That's where programs defend. That's where institutions defend. And this is something that I created, 10 years ago? And it still works. This is my custom data point, which, again, I share freely, but it's my data point that is basically the absolute value of the close minus VWAP, or VWAP minus the close over 300 periods, normalized over 300 periods for these standard deviations. And you can see it plays out perfectly there. So this is something that we'll be incorporating in our room a little bit more, having some of these composites. But look at that, a nice markup phase. And for those of you that are not in the trading room, these are the types of opportunities we look for in the room when the market lines up in that way and we see a price discovery phase on an intraday basis. This is what we're looking for. So to see this play out on a higher time frame basis as well, again, that's what makes our approach to the market universal, because the same thing you're looking for on an intraday chart, you can be looking for on a higher time frame chart, and vice versa. Let's look at a couple of more of these. Let's look at, for example, the NQ. Here's the NQ, and look at where its position is right now according to these bands. Right now, third standard deviation. It pushed through it here and closed above it. The retest was here, and then it just shot up. The next time it tested the band was until here, and again, another opportunity there. So this one continues to drive. As soon as it fails to hold this level, the next level down may be R2, right? So we'll see how it plays out, but right now, still in the price discovery phase, still trending higher, and that's why this thing, all pullbacks are still buying opportunities. If you look at something like crude oil, check out crude oil. Right now, crude oil has formed a nice, large trading range. And again, this is a May 17th contract. And then you look at these highs here. You look at these lows around 47 here. This VWAP is flat. Anytime VWAP is flat, the idea is to fade the edges. Fade the edges, right? Because it's a trading range market, most likely. And so here is S3 band, and look at how bulls defended that edge. Down here is the S3 band they defended. Down here, they got outside of the S3 band and then climbed back above it, hit the S2 band, and then came down and hit the S3 band. That right there is one of our favorite entries when it comes to the max reversal trade and the bands. So for those of you that are in masters and also in premium, you know this like the back of your hand. Basically, if price cannot go into a price discovery phase below S3 and climbs, right, hitting this level right here quantifies that the squeeze is occurring. Coming back to this level is your entry, and then the target is VWAP. And you can see how it reached it 1, 2, 3, 4 days later. Boom. And that went from 47 all the way up to VWAP, which is about almost 52s. So basically a 5-handle move in a matter of a few days, just because you're able to pinpoint the zone. So very nice how this is played out. You can see up here again, it was trading the upper distribution up here, and then it just drops right back to value lows. So this is awesome. This is huge. To have these indicators finally in here, for those of you that have been patient with me and been using NinjaTrader, this is awesome. I'm very, very excited about it. There's others as well. I mean, if we look at something like DX, Oh, I didn't even talk about DX yet today. Here's a look at DX. One thing about DX was that last February was right there, the end of the month. So February 2nd comes into play, or the second trading day of February, and I said what we're looking for is a rejection of these lows and then a rally to 102s. And if we get to 102s, look to sell it back to 100.5 and 99.5. So that's what we talked about last February. Bring it up to 102. And then in March, price was up here near 102s, and I said if you can't get above 102s, 100.5 and 99.5 are back in play. So this one has been fantastic for us. If you recall, what got me initially bearish in DX, for those of you in the trading room, you know this was the first trading day of the year right there. And look at how it rejected those prior highs and had a huge day down. On that first trading day of the year, I said, that's pretty significant rejection. That implies weakness coming, blah, blah, blah. It drops down, comes up, and look at it test R3. Again, that's another perfect entry for us the way we usually do it. Testing R3 right there, and then it drops into support. Then down here, we called for it up. So over here, we called for it down into support. Over here, we called it up to 102, then 102 down to 99. It's played out perfectly. Perfectly. So this is something that we'll continue to watch. 99 is a key level in DX. 102 is a key level. And we could continue to see fading the edges at those zones until proven otherwise. At some point, we will see expansion, but right now, the play is likely back up toward 102s, probably back down, and then we'll see what happens from there. But this range is still in effect, and you can see how it's played out according to that range. So really, really nice stuff here with regards to NinjaTrader and some of these indicators. Have a couple more to finish up, and then the whole suite of 6 will be done. So the 6 indicators that are PivotBoss indicators are PivotBoss pivots, ADR targets, ADR advanced ADR indicator, and then we have PIMA 3 pivot PIMA oscillator. So all those are going to be ready to go. Okay, so there you go. Greg's asking here, how do we get the code for Ninja? So good question. Thank you for asking. So I know some of you are Masters members and some of you are not. Some of you are part of Premium. And some of you have the book. Some of you have never heard of me before. So right now, Masters is something that we're going to be doing here next. Our Masters traders have been very patient as well. We've done some great training last year. We did some fantastic trading to begin the year, and you know, we filled up a bunch of great content in Masters. And now with NinjaTrader here, we're going to be adding more content here to come. And what's going to be coming here over the next couple of weeks is another Masters training course that's going to be coming up. Right now, this is all the training you get, right, with our core training. Our core training is basically analysis, theory, and execution. It's basically everything you need to know to become proficient in the market and understanding what to do, right? How to execute, how to analyze, what your framework for the market is, etc. And then we have proprietary training that trains based off of our tools like PivotBoss pivots, PivotBoss bands, our ADR method tools, and our PIMA tools, right? And those are the indicators we were just looking at. So all of that is there. What we're going to be doing is doing training for Ninja, and training for IRT, Investor RT, and also training for Thinkorswim, and we're creating a backend that will host all of that as well. And so this is going to be pretty fantastic. So that's going to be the first spot to get the Ninja code is for the Masters traders that are in there, that are going to get it first, and then from there we'll roll it out as well. Premium members who are also Masters trainers will have it. Our premium folks will get it as well. So it's going to be a lot of great stuff to come. You're going to see some changes in the sites to come, as well as we're going to. We've gotten so much content and tools and so many so many great things that we've built up in Masters over the last 5 years. that it's a great time to reorganize and make some things stand out for you all. It's a great time to get all these indicators all in the same spot so you can find them and get them. And then it's going to be a fantastic time to be a part of Premium, because for those of you that become part of Masters, you also roll into Premium and get a free month of Premium. So that not only do you get the training here, but you're also jumping right into the trading room. You're hanging out with those of us that have been in there for a while. Together, hanging out, trading every single day, and doing what we do, right? So it's kind of a hands-on type of thing, implementing all of these tools, techniques, and ideas that we have here. So Masters is going to get the indicators here first. Over the next couple of weeks, we're going to be doing that, and the training will be in the last week of April. So you're going to be seeing an email come out here over the next day or two that will start to put out the schedule for what we'll be looking at the last week of April, so it's all coming very fast. The other thing to know is that because we have put so much content in Masters here over the last 5 years without ever having a price increase, we will be doing a price increase after this next round. So this, if you're not part of Masters, this is a good shot here to get in before the price increase, because, again, I think my goal has always been to provide value. Right, it's $995 to get all of this training, which is an immense amount of great training. But right now, the value is significantly undervalued at the moment. It's just got a ton of great content, and so first time increasing it here ever after 5 years, and I think it's time. So we'll get everybody in who wants to get in at the lower price right now. There's always a 30-day money-back guarantee, risk-free. If you just say, I hate it, you get your money back. If you say, I love it, but I'm not ready, you get your money back. To this date, nobody has ever asked for their money back. One person did. It was unrelated to the actual content. It was on their end. So, but in terms of the content, no one's ever asked their money back. But I definitely will do it. So I always want to give that peace of mind to anyone. This is a fantastic opportunity, but you're going to see more of this coming out, and I'm looking forward to using NinjaTrader more for those of you that have been asking for it. So great stuff to come. We're going to have some live sessions coming up at the end of April, and a lot of great things to come here for Masters and for Premium and everyone that's a part of PivotBoss. So again, I want to say thank you all very much for being a part of today's session here. We covered a lot of great material. I've been very happy with how the market has responded to our levels here over the last few months, and we'll see how it plays out heading into April, May, because I think we could be looking at much more strength ahead, and it could be significant. So we got some key levels to watch. We'll continue at it. I will be recording this and sending it out perhaps tomorrow morning, so be on the lookout for that. But again, thank you all so much for being a part of this market outlook. Always makes me happy that you come out and join. Thanks a lot. Oh, thanks everyone. You are fantastic, and always looking forward to getting back with you again. I'll be in the trading room tomorrow. If you all want to be a part of the trading room, it's just $19.95 to try it out for 2 weeks. $19.95. So you can jump in, check it out, and be a part of what we do. So thanks a lot for hanging out. We'll see how these markets play out here in overnight trading, and could be significant as we head into NFP later on in the week. All right, folks, thanks a lot for hanging out, and I'll see you all soon. Take care.